anything we invested in, somebody would invest in shortly afterwards at a crazy price. Um, and that was the craziness of 2021. Even without taking a broad view, fintech is huge because financial services are like 20% of global GDP. It's just like a massive industry. And there's just so much opportunity there. There have been cases where just like, in a seed round, a company initially says they want to raise X, we give them an offer and then ends up raising 2 or 3 times X. Super successful kids dropping out of high school to start companies and raise a ton of money, know what you're doing.
Hey everyone, welcome to the DPI podcast, where we talk to the top pre-seed GPs and deconstruct pre-seed investing. I'm Vignesh, I'm a partner at Sierra Ventures, and your co-host.
It's your co-host, Brendan, principal at Sierra Ventures. Super excited today. The one and only Sheel Mohnot's joining us. So Sheel is a GP and co-founder at Better Tomorrow Ventures. So they're investing out of Fund 3, writing pre-seed checks from 500K to 4 mil, founded in 2019. And welcome, Sheel.
Glad to be here. Thanks, guys.
Yeah, appreciate it. And Brendan, I think you forgot to mention Sheel's a Twitter superstar, and so I think we're also hoping to talk about that at some point.
Yep, 200,000 followers. We'll save that for the spicy takes and stories section. But so Sheel, you have a fantastic background. When it comes to getting into venture. So you founded Fee Fighters with a couple other folks back in 2012. The Chicago ecosystem that was acquired by Groupon in 2014, and then another company, Innovative Auctions, and then went on to co-found 500 Fintech and run that with Jake for a few years. So tell us about the story. Would love to hear the origin story of Better Tomorrow, how you guys both landed on this, and what were some of the foundational principles that went into that?
Yeah, so I met Jake in 2016. We both actually, so Jake is a co-founder of NerdWallet. NerdWallet and Fee Fighters actually are very similar. Like Fee Fighters is kind of the NerdWallet for businesses. And so we actually had been quoted in articles as far back as like 2010 or 2011, I think. But we didn't really meet until 2016. At that point, I was doing a bunch of investing in fintech, and Jake was a friend of a friend. So we got introduced and then kind of immediately hit it off. I would say he invested in a bunch of the companies I was investing in. And then we started to work together. He was an EIR on my fund, my little fund. It was 500 Fintech was a $15 million fund, and it was me as the GP and Jake as EIR. But really became kind of like my partner. I was running decisions by him and stuff like that. And then when it came time to do our own thing, it made sense for us to do it together. Along the way, actually, we considered going to join another fund, like separately. We both were interviewing at like multi-stage funds, and then ultimately, after spending time with a bunch of those funds and in partner meetings and stuff like that, we decided that going to a big fund wasn't the right thing for us, and we sort of just said, "Hey, let's do something together, even if it's smaller. Whatever it takes to start up, we will do it and do it together. Do it the hard way." And also, it felt like going to a big fund is very different than starting your own fund, and I think like if you're an entrepreneur, you might want to start your own fund. And so I'd say like what we chose the more entrepreneurial path. Definitely, probably not the easiest path, but it's been fun.
Unfortunately, you kind of picked the timing of it right. You did, I guess, Fund 1 starting in 2019. I'm just curious, maybe if you could walk the audience through the journey of BTV, because you started in great time for fintech, and then obviously went through the crypto winter and some of the challenges the fintech market fintech market went through, and then you've now raised 2 funds since then. So maybe just talk a little bit about the journey and kind of how'd you guys end up at where you are today.
Yeah. Okay. So we started in 2019. So background in fintech really wasn't a thing just 15 years ago. Like there was no name for it. And then, all these companies started around like 15 years ago. There's the Wealthfront Betterment, the lending companies, Robinhoods of the world, and then fintech sort of like slowly was on the rise as a lot of the companies went from a lot of the financial services companies, first went online. And that was like really early. There wasn't really a fintech concept of fintech that much then. And then when they went to mobile, that became when fintech really had a rise. And, I started investing in fintech in 2016. At that time, or 2015, actually, at that time, you kind of knew everyone in the industry. And then, and every company, like pretty much every company that had raised, like I had met. And now there's nothing like that at all. There's so many companies that I see that I've never met before. I see their funding announcements. So it really had a meteoric rise. 2019, was a good time to start. We really started 2020. It was December 2019. And 2021 was absolutely crazy. It felt like everything we were investing in was turning to gold. It felt that way, although certainly not true. Because, anything we invested in, somebody would invest in shortly afterwards at a crazy price. And that was the craziness of 2021. And most of those companies did not deserve those crazy prices that they got. And we ended up, in a position where things were looking really amazing in 2021 for us. And actually, we relatively quickly raised a fund two. That was, so it was about 2 years after fund one, we raised fund two. And we doubled. Fund one was 75. We pretty much doubled to fund two. And then started deploying in 2022, fund two. Fund one, I think we led 22 investments. Fund two, being a bigger fund, we did more. And then fund three, which we just launched less than a year ago, is similar size to fund two, and will probably be a little bit fewer investments.
Hey, I'm curious, Sheel, well, there's a couple things in here. One, maybe let's just start with the LP piece of it. When you did the first fund, there were not many dedicated fintech funds. Now, obviously, you had a great background, came from 500, so you had the brand to be able to go do it. But I'm curious, how did you guys kind of convince LPs that the timing for fintech was now? What got them excited about backing a fintech-only fund at the time?
It's a good question because actually it was very difficult. A lot of people didn't believe fintech was a good category. A lot of people, which was kind of surprising given what's happened since then. A lot of people didn't, we're relatively unknown. So people, had those issues. And then people had issues because we hadn't really worked together as partners. So there were a bunch of issues people had. The way it worked was, I mentioned we started December 2019. December 2019, we did a fairly quick first close on the fund, and that was about $20 million. At the time, our aspiration for fund one was $60 million. So the idea was build a $60 million fund, one, and then, we didn't think we would grow as much as we did. When we had a third of the fund committed, we closed on that. And that was a lot of individuals, family offices, and one fund of funds in that first close. And then by the time we did our second and third, sort of final closes, it got a lot more institutional, and it ended up being, we had a bunch of fund of funds. We had sort of a pension and a university endowment in there. So it ended up being a fairly institutional fund, and then that has continued. So now it's just gotten more institutional, I would say.
Sheel, I wanted to talk about thesis. I think one thing as a VC is you try to, stand out. What are you known for? What's your specialty? But, also, you try to give yourself a little bit of optionality in the process. So, I think you've talked before about really like everything is a fintech company or can be in some shape or form. Like even Toast, like 83% of the revenue comes from, fintech financial services, not the software subscriptions. And you're backing, like you guys at BTV are backing the infra, like enabling the first side of that. So how do you unpack this? Like what, like how does your thesis extend? Where do you guys call the line? What's like not fintech? And especially for some of the founders listening to this and figuring out, what am I a good fit for BTV?
Yeah. So I think the nice thing about fintech is it's a narrow area, yet it's broad enough that you can kind of encompass a lot of stuff. When we say everything is fintech, I think we really think about a lot of SaaS businesses ultimately will monetize through fintech, and even some non-SaaS businesses, marketplaces as well. So we'd like to invest in those companies that we think ultimately will be fintech companies. And as examples, we invested in actually the second investment we made out of the fund is a company called Lunar. It's it's a software for hospitals, and didn't start out as fintech, but ultimately, if you think about what happens in a hospital, there's a lot of financial services stuff. There's insurance, there's payments. So it is in some ways a fintech company. We've invested in marketplaces that add payments and lending onto them. So in general, I think we take a broad view. I would say, even without taking a broad view, fintech is huge because financial services are like 20% of global GDP. It's just like a massive industry. And there's just so much opportunity there.
I think the other part of the question then, Sheel, is not so much that the category itself is big from a dollars perspective. I think it's a question of why are startups the right folks to go and attack. And obviously, we've seen some really interesting companies. You saw Brex recently and Ramp and like some of these things around the cards business. But I guess if you're thinking about building a portfolio and building an entire fund around it, you have to have a pretty compelling strategy as to how fintech kind of emerges and evolves in a bunch of different categories. So there's kind of two questions here. One, I think going back to what you were saying about kind of how the fund started up. I mean, interesting to hear what how heavily skewed your portfolio was towards institutional VCs, and for the listeners to have a fund one that's so heavily institutional is not always so common. So really, kudos on doing that. But clearly, you had convinced folks that fintech was not just going to be a standalone business, but going to be embedded in everything. And I'm curious, kind of like, what was it about? What was it that kind of drove your conviction in that thesis? Because at the time, like Toast was a good company, but hadn't broken out in the way it broke out right now. Even like the Ramps and the Brexes, you didn't really have like those massive winners. So like pre 2019, a lot of the fintechs were like the Chimes and like the consumer banking apps. And so like I'm curious kind of how you convinced LPs that we were going to end up where we are today.
Yeah, so I think you're right. Like there was a lot of consumer businesses that were, bringing stuff offline, online, and then into mobile. And I think we believed that still is, they still haven't solved all of the problems. And fintech would be more ubiquitous, sort of given the Toast example. Like, in one application, a restaurant owner can do everything to manage their business. And a large part of managing their business is managing their finances. And Toast now enables that in a way that was not the case then. Shopify, many others as well. Uber has some aspects of that as well. And so it was just convincing them that infrastructure layer was going to be important.
Sheel, one thing we want to talk about. So you mentioned sort of the frothiness of 2021. I think we're seeing a lot of that right now with this AI wave. Seed rounds are bigger than they've ever been before. Pre-seed rounds are now also bigger than we've seen in a long time. you guys are devoted, and we're actually doing a lot more pre-seed inception stage stuff right now. And working within the 400K to 4 mil check parameters, you're probably getting a lot of multi-stage funds coming in and trying to either lead or co-lead, the same rounds as you. So would love to get your take. Like, how do you compete for those rounds? How do you position to founders? Like, you're the right partner at that stage in the game, and will be a long-term partner as well. Going forward.
Yeah, it's a good question. I would say we have done pretty well against the multi-stage funds, and I think part of it is it really helps being dedicated to a sector. So the fact that we are focused on fintech, I think, is a superpower and gives us a opportunity to maybe get it. Like they might have an option from a multi-stage fund that might be a higher price than we could possibly pay. But they still might choose to work with us because they think we can get them further. And that has played out in many cases. I I think our pitch is we've done this before, like we've been founders, and this is all we do. And you know what? That multi-stage fund is still going to be there for you at the next round. And there have been cases, there have been actually a few cases recently where we beat out a multi-stage fund on the pre-seed, and then a multi-stage, in some cases, that same multi-stage fund came in at the seed round or at the Series A. It actually has happened. It's happened several times. So yeah, it's. I think that tends to work for us. I would say what is tougher now is in 2026. There have been cases where just like in a very, in a seed round, a company initially says they want to raise X, we give them an offer and then ends up raising 2 or 3 times X at a much higher price. And they say, hey, like, do you want to, we had one recently, do you want to come in at 90 million posts? And you're just like, no, we're a seed fund. That doesn't, the math doesn't work for us on a basically pre-seed round.
How do you manage valuations? Because like one thing Vignesh and I talk a lot about is, how do you methodically build a business from the ground up, and also give yourself optionality along the way. I think a lot of founders are seeing all the headlines and fundraising, and they're like, well, why can't I raise at a 500 mil valuation out the gate or 90 out the gate? Like, how do you sort of like walk founders through that and lay out the story on valuations?
Yeah, I think, look, a lot of companies that raise a ton of money out the gate did not end up being successful. And I think it's important for founders to know that they have more optionality if they raise less. And I think certainly many multi-time founders will tell you that. I think like, who's effective at telling that part of the story is really like founders that have worked with us that chose us over other funds and chose to raise a smaller amount, even if they were multi-time founders. And usually we can get them on the phone with somebody like that, and that helps a lot.
I'm curious for you guys as well, Sheel. Like you're in the conversations that you have, and based on kind of the the way you've worked with founders, and again for the founders that are thinking about raising from like a true pre-seed fund, like can you give us a couple of examples or maybe some like something a little more concrete that helps them understand what the difference is between working with you guys at the pre-seed versus working with a multi-stage fund at the pre-seed? And I'm not saying anything is like either one is like good or bad, but like I think there are like tangible differences, right? And I think it's just helpful to identify what those are.
I think generally speaking, a firm like us, you'll be closer to us. Like you'll feel like it will be more of an extension to the team in the sense that like we're in text or WhatsApp with each of our companies and sort of like pretty much every hour of the day I can count on somebody asking me something. Like it's already happened during the time we've been on the call. And so I don't think you get that necessarily with other funds. And I think we're definitely like folks our our founders will tell folks like, you know, the first anytime that something happens, good or bad, I reach out to the BTV folks first to get their take. So I think that's really it.
Yeah, Sheel, and you make a good point. Like I think like at Sierra, we've kept our fund sizes, you know, kind of like 2 to 250, 300 range. And part of that's by design. Like you can only make at that point make so many bets per fund. You kind of get that intimacy with your founders across the board. You know, we always strive to say like we want to be that first or second call you'd make in the tech syndicate, whether you're seed stage or Series D stage. You just raised Fund 3. Fund 2 is 150. Fund 3 is 140. You know, is that by design? How do you guys think of, you know, the fund shape and, you know, just kind of the bandwidth that you and Jake have working with founders and, you know, the discipline that goes into that?
Yeah, so fund 2 was 150. Fund 3 was actually we had planned to shrink it a little bit to 125 was originally the idea, and then we had an LP who wanted to write a larger check, so we went to 140. The reason we wanted to shrink it was a couple things. One, it took us longer to deploy Fund 2 than we had planned for. It was just a bigger fund, takes longer to deploy. And along the way, we had started an accelerator program called the Mint. Mm-hmm. And it ended up being the case that although, you know, I think successful, it ended up just taking up a tremendous amount of our time. So we decided after Fund 2, we were not going to do the Mint again. And so we just had like, you know, $25 million allocated there that we didn't need for Fund 3. So we decided to cut back, but then, you know, it ended up nearly at the same anyway because of the LP.
Actually, I remember we talked about the Sheel maybe a year or so ago about the Mint, and you know it sounded like you guys had done what, maybe 2 or 3 batches out of the
we
Mint
did 4
batches, yeah, so 4 batches out of the Mint. And the interesting thing is like the timing of all of it, because like you look at like the world today and like there's way more like inception stage investing happening, and not just inception stage, but like, you know, raising like literally $1 billion at like pre-seed stage sort of stuff happening. And it's interesting that you guys kind of are, you know, zigging what everybody's zagging and going away from that model. I'm curious kind of what was the rationale behind it?
Behind not doing the Mint anymore?
Yeah. Especially when others are continuing to do Inception.
Yeah, so I'd say like we're still doing Inception. We're just not doing it through a formalized program. So the Mint was an in-person program for 3 months. And so what that means is, so first of all, you should know like we're a small team, 4 investors. And an in-person program for 3 months, twice a year, just was a tremendous amount of effort. It, you know, because you're in session 3 months, 6 months of the year, and you have to find speakers, like spend a lot of time with the companies. Like when you're in the same office, like they're just tapping you on the shoulder and jumping on the whiteboard. It's a lot of time. And then the other 6 months of the year, you're basically recruiting. So we felt like we didn't really have time to breathe and look at as many companies as we would have liked. So that was kind of it. We're still doing inception stage companies all the time.
Sheel, let's move on to some of the thesis. You guys have double, triple down on, over the funds 1 and 2 and now into fund 3. So I think accounting is a good example. Like you backed basis, layer, and scope, I think in a pretty somewhat compact timeline. Um, was this by coincidence, like, or did you have like this accounting thesis top of mind? What are some of the other use cases? What's sort of the um like, how do you guys like operate as a fund too on this? Like, do you kind of have like 5 theses that are rolling and looking to make bets on this, or you just kind of follow where you find the best founders and kind of the broad fintech thesis?
Yeah. So we we think about it in a so accounting specifically. We had a thesis around it, and the idea was there's an accounting shortage in this country, and technology can solve this or can help solve this, and particularly around AI, if you can structure the data that's unstructured and fuzzy, you can follow rules, and that's perfect application of AI. Some context on that, in the accounting shortage is very real. If you talk to any accounting firm, and we talked to some accounting firms, they all said we can't hire enough people. It became along the way, it became just very uncool to be an accountant. So fewer people started to do it. Like, the accounting majors in college, I think, dropped by 50% in the last 20, 25 years. So they just weren't attracting new grads. And so they didn't have the bottom layer of the pyramid that they usually need. And we said, okay, like there's clearly an opportunity here. And it has played out quite well. And, when the idea was like, look, if there's a burning need they have too much business and they can't serve it, they're going to want to buy technology. And that has certainly turned out to be the case. So, the companies you mentioned, Basis automates the work of a junior accountant, and they sell into large accounting firms right now. They're also selling sort of direct to companies. InScope helps close the books for the first set of customers are late stage private companies. They also work with now accounting firms as well. And then Layer is an embedded accounting firm, embedded accounting business. So they sell in through vertical SaaS companies and offer like a QuickBooks within Toast plus bookkeeping. And if you think about it, like those vertical SaaS companies have a lot of the information that you need to do your bookkeeping, and you can get that information and automate it, make life easier for customers. So those are a few of the things we've invested in. We actually would continue to invest in accounting. Like, it's been a great category. All these companies are working, and we think there's a tremendous opportunity there.
Yeah, and actually, it's interesting. The 3 buckets or 3 types of companies that you gave as examples all have slightly different distribution strategies, and we'll come back to this actually when we talk about how do you pick founders and like what are you looking for in distributions, or how people think about distribution strategies. But one question I had for you on something like a Basis and maybe even a little bit around InScope was, like, how do you think about the defensibility around this? Like, obviously, selling the outcome makes it way easier to go get a customer, like easier to get dollars for it. But I'm curious, kind of like over time, one of the questions that we've been thinking about is if you're selling the outcome, like ultimately the customer doesn't care how the outcome, how you get to the outcome, just that it's right. And so I'm curious kind of how you think about defensibility then in that case.
Yeah, I think these days there are no moats anymore. I think I think it's hard. So I think there's no the defensibility is you execute well and move fast and respond to customer needs. Yeah. But there's I think of very few businesses nowadays in the AI era have very strong defensibility. If you think about it, like even the model companies, people are changing them out all the time. New model comes out, you change in a day. So yeah, I think it's tough, but I think you have to really just focus on the best executors.
Do you find that there are ways to build business models that kind of that help you build moats? Like as an example, are you finding companies that are using AI as a wedge and then building like I don't know payments businesses or marketplaces on the backs of it? Like is that a like something that you're starting to see more and more, or is that too early to say?
I'd say too early to say. We haven't seen that many. Yeah, we have seen some companies that have an idea to start with AI as in a wedge and then build a marketplace. Um, haven't seen it executed yet. How about you guys?
I think we're starting to see a couple. We haven't announced the investment yet, but we did make one investment in a company that has that sort of go to market. It's actually quite interesting because when you think about it, like if back to the earlier question, if the models are getting so good, it's starting to get to the point where we think that the AI layer could be a little bit more commodity. But if you're doing AI as like a wedge to go do customer acquisition, making money on payments or something on the back end, that actually tends to be a lot stickier because the payment rails and the workflows and all that stuff tends to be more of a pain to switch out. So we are seeing some very early signs of it starting to happen. But yeah, it's not a lot. It's still very early.
Totally. Yeah. Makes sense. Yeah, one that we've seen is basically AI to get get a wedge and build a data, get a bunch of data, and then use that to build a marketplace.
Yeah, yeah, yeah. That we've seen as well. And then I think the other thing we've seen is, and this was actually on the healthcare side. We're starting to see this, funny enough. But can you use AI and then start doing like factoring or something like that, where because you have better visibility into the customer, like there's a new way to do financial services. So we are seeing stuff like that.
Sheel, we talked about some of the business elements of why you back founders, and you alluded to this a bit. You're like execution. That's one of the things we index on the highest. When you're having conversations, you're evaluating an investment, digging in. What are you indexing on? Like, what are the signals that are like, hey, this founder or founders are rock stars. They're moving quickly. They execute. Over the 1, 2, 3 weeks you're spending with them.
Yeah, I think you nailed the first thing, which is like, are they moving quickly? Now, how do you figure that out? I would say it's really just like talking to them about progress they've made recently and even in between our first and second meetings. So I think speed is probably the most important thing. Are you moving fast? And I'd say like the second thing is tenacity. Are you willing to break through walls to make stuff happen? And then the third is like, are you a talented recruiter? The team you build is the company you build. And as a founder, there's only so much you can do yourself. But if you're a very talented recruiter, you can bring on amazing people to get stuff done for you.
In this AI wave, are you seeing the founder profile change? Like, there's obviously a lot of buzz about these AI native builders, younger, they some dropping out of college, some their first or second go around, out of college. Are you seeing anything different in the founder profile changing? Are you guys backing younger founders or more AI native, or has it kind of been pretty similar to the last couple waves?
It is something we keep thinking about. Like you hear about these kids, super successful kids dropping out of high school to start companies and raise a ton of money. We haven't backed anyone like that. We haven't even backed any like college dropouts. I think in general in fintech, it really helps to have some experience and know what you're doing, and you can move fast and break things can be really bad in fintech. So I would say we haven't done the super young founders. What about you guys? Have you done any?
We've invested in a couple, yeah, but I think you're right. They don't tend to be in the regulated industries. They tend to be in more of the really cutting edge stuff, things where they have an innate advantage, like whether it's like AI research or something like that, or some of the more frontier tech spaces where they're just so new and nobody really has any experience. So we're seeing something similar to what you're seeing there.
Yeah, Sheel, I think this ends up being like we saw with the SaaS wave and mobile marketplace wave. I think this tends to be at the front end of the cycle. So you look at the like boxes and like Airbnb and companies like that of each of these waves, or Facebook way back in the day, tends to be early on in the cycle. And I think over time, some of the technology gets abstracted, and you start to see more of the seasoned or folks that have been working in the industry or within the technology space over the last 5, 10, 20 plus years. So it's an interesting dynamic.
I think the only interesting thing, and this was something that we've been thinking about as well, and I'm curious what your perspective is, Sheel, is the question is almost not whether they're young or not. The question is whether they know how to adopt AI in the most effective way, and they have like, I guess, enough neuroplasticity to like really think about the way tools are showing up, hiring teams in a more AI native way, and just given kind of what your comment about the types of founders you guys are working with. I'm curious what you guys are seeing in the spectrum of like how people are actually adopting AI when they're not like quote unquote AI native.
Yeah, it's been all over the map. I would say in our portfolio, some founders just took too long to get to it, and or maybe not even founders, but like CTOs. Like we have a CTO of one of our portfolio companies that I think was just like opposed to AI, or not opposed, but like not embracing it as much as we would have liked. And then ultimately we made a change at the CTO role, because we felt like he wasn't moving fast enough for today's environment. And I think there's this trope that in every board meeting you have VCs saying, "Okay, so what's our AI strategy?" And I think it's true, but it's also fair. I think like everybody should be thinking about AI, and it has made such a tremendous change in many of our companies. So if you're not thinking about it, you're probably going to be left behind.
Yeah, and I think that like is almost a given at this point, right? It's like if you're not AI, if you're not adopted AI at this point, like I think it's you're a little bit late. Maybe still not too late yet, but I do think it's a thing that you have to get on, and there's just no way that you can keep up with the pace of growth of some of these other companies without it. I am curious, kind of now that you talk about board meetings and talking about managing companies, I'm curious what you're seeing like in a lot of these application companies, or a lot of these like AI application companies in particular, like the growth of some of these companies has been just so fast, and they get out of the gates really quickly, and like you're seeing this like crazy ARR ramp. Fintech is a little bit different. I mean, there's just like regulatory hurdles to get over. Like even in a company like a Basis, like I mean, you can't get the accounting wrong. Like that's basically the death of the company if you get the books wrong. Right? So like I'm curious, how do you guide like your founders then, given the noise around the market? How do you make sure that they're moving fast enough but also not making mistakes along the way?
Yeah, I think it's very important. And I think people realize that. I think like I think to your point, if you get it wrong, you might be out of business very quickly. And I think security is very important. Trust is very important. I think in fintech and financial services in general, trust is one of the most important things out there. Um, you know, it, you don't need as much trust to like download a new photo app or video app. But if it's something that's touching your money, you need a lot of trust. And so I think that's also partially why you tend to have more second time founders, or folks who've been around the block a little bit. Um, but I'd say like we just advise our founders that trust is important. If it takes longer to get started, but you've built some trust, that's a better way to go than to move fast and break things.
Sheel, so among all your superpowers, like other than fintech and pre-seed investing, the other one is personal brand. I think your Twitter X following has almost 200,000 followers. The funny thing is, most of the advice is, post serious thought leadership for GPs. But you do the opposite. Like I remember just reading my like regular X feed, and I'm like, oh, I know that guy. And you're talking about some cool stuff that has nothing to do with fintech or business.
I think Taco Bell was mentioned there, if I remember correctly, Brett.
Yeah, that's right. Yeah,
I think you might be the only VC that got married at Taco Bell, so that's
yeah, probably true.
pretty sure. But yeah, I think what's your rule of thumb for that? Like, is this just a personal thing? Is it actually, is there some method to the madness here, and growing your brand on the VC business side to get in front of founders, like, or is it just this thing that kind of has gone viral over the years? You kind of be yourself, and it's sort of this parallel project that you work on.
Yeah, I would say it's just being myself. I was not intending to. So first of all, like how it started is it was during the pandemic. Before then, I wasn't super active on there. It was actually what happened was Clubhouse. If you guys remember, I got active on Clubhouse, having a lot of fun on there, meeting a lot of friends. And the way to message with people outside of Clubhouse was on Twitter. So then I got on Twitter and ended up sort of developing a following on Twitter, and it's grown over time. And it's been really fun to engage with people and post my thoughts. And to your point, some of it might be about, thought leadership on venture, but rarely I would say it's just like whatever I'm interested in. And I generally don't think about it as like this is something that's going to help my business. I really just think about it as like, I'm having fun.
Do you get ROI out of it? Like, do you get more inbound from it? And yeah.
For sure. Yeah. I would say like so many folks reach out to us or think of us because they see something on there. And then folks have just reached out directly after seeing posts, and it is very helpful. The other thing that I'd say that I haven't done as much, but is helpful is, when you write a topic or thesis area, a lot of folks come out of the woodwork, and that's been really good. And my partner Nihar has done a lot of that.
Yeah, I think that's really good. But look, at the end of the day, it's all about distribution, and the fact that you have the distribution advantage through Twitter is huge. I guess maybe one question for you is, does it feel like it's a little too late for people to hop on the Twitter bandwagon right now, or like if somebody's just starting fresh, like where do you suggest they start? Because it has gotten a lot noisier.
It has gotten a lot noisier. I don't think it's too late though. I think you can always, create a new. Come up with a thesis and be yourself and have success there. I think probably like I don't do a whole lot on LinkedIn, but I think it's probably a good place to go. I think there's a bunch of places you can go, but I don't think it's too late for Twitter.
Yeah, fair enough. I guess maybe switching gears and being conscious of time, I want to talk about the macro around fintech. And one of the sections that we like to talk about on the DPI podcast is hear your view on kind of the sectors you're passionate about, the macro, and kind of what are the themes and theses that you're excited about and looking for companies in. And so maybe just to start with, Sheel, love to hear your perspective on the macro around fintech. I mean, obviously, we've had a couple of big exits recently, so that's been great. AI has been a nice tailwind for a lot of these things, but I'm just curious kind of what your read on fintech is overall.
Yeah, so I would say it's been a wild ride. We talked about it a little at the beginning, like things were crazy in 2021, and things really fell off in 22, 23. I'd say like now things are quite good again. I think vertical AI has been quite good, and we talked about the accounting companies, but there's also companies selling into banks, selling into the CFO suite. There's just like a lot of stuff in vertical AI that is fintech. So I'd say like unsurprisingly, that's what I'm excited about right now is the AI companies. And it's hard to be excited about the non-AI companies just because they're not growing nearly as fast as the AI companies.
Sheel, I know you laid out the bull case for the market. what are some things you guys are watching? Potential headwinds. Things to steer around over the next 5 years.
One thing we're really thinking about in all these, sticking to the vertical AI topic, is what's defensible. And it's really hard to know. Like a lot of the darling companies from 3 or 4 years ago just totally fell off as the general model companies were able to execute on those things. So, think about like Jasper and Writer. Those were like hot companies 4 years ago. And then now I don't know how they're doing, but I imagine not that well. So we're trying to think of like, what do we have that's sustainable and defensible? And if you think about, we can talk about some companies outside of our portfolio. Let's say Harvey and Legora, very obviously very hot in the legal space, growing very fast. I think there are some legitimate questions about what is the ongoing opportunity there if you could just use Claude Legal or any other model decides to go in that space. And I think there's a lot of evidence that the general model companies are building into the app layer. So very top of mind is, as we invest in these companies in the vertical AI space, like, are they just going to get eaten alive by the model companies?
Maybe the other kind of, I guess, both headwind tailwind question or thing we can talk about is what do you see kind of internationally? I think you had talked about fintech in India as a theme. I mean, we're seeing this kind of happen in Europe as well. We're seeing like new accounting rollups and things like that. So outside of the U.S., what are you seeing as far as interesting themes or trends?
Yeah, I'd say like we're doing less outside of the US at the moment. We did a bunch. I'd say like lessons learned there were just outcomes are smaller. In general, like I think we had a thesis that there would be larger outcomes, and it didn't play out the way we'd wanted to. So I'd say we're still doing stuff internationally, but we're generally, when we do stuff internationally, it's more focused on global markets than domestic markets.
Yeah, fair enough. And I mean, interestingly enough, I do think these things always have a time and a place. And I'm curious about India as an opportunity. I know historically not been good, but just interesting data point we've been seeing. When I started in venture, 13 years ago, selling to India would be unthinkable. Like there was just no enterprise deals to be had. But like we're starting to see like the enterprises, the banks especially and stuff, spending real dollars and so it does feel like things are changing, but I hear you. It's been hard to generate real returns in some of these other in some of these other geos. Um, a- and Sheel, maybe just from a thematic perspective, kind of going back to the other part of this question, are there two or three areas that you're excited about? Like, are there for listeners of the show, like, are there types of companies that you're excited about? What should they be sending you, or what sorts of founders should be reaching out to you?
Yeah, I would say, you know, we're open to anything within fintech. As I mentioned, I think like I particularly am pretty excited about vertical AI, and I tend other things about the companies I'm most excited about tend to be um, working together in the office every day. I tend not to be excited about remote teams, um, and and then just like companies that iterate fast and talk to customers. But sort of thematically, there's not any one theme I'm totally chasing right now. We talked about accounting earlier. I would certainly do more in that field.
Sheil, with like sometimes in these like frothy markets, you start becoming more open minded, and you're like, how can I be non-contrarian? Are you looking at like, do you find yourself now like looking at weirder business models, things like 3 years ago you would have said absolutely no way, but let me take a meeting here. Do you have any examples of that? I know on our side we're looking at the roll ups. We've been looking at a lot of like I would say like these like deep tech, hard tech businesses that when it got initially pitched by the team, we were like, "What is this?" And then you're like, "Oh, this is super cool." When you pull back the layers. So yeah, just kind of curious on that because it's been interesting.
Good question. I would say what has been interesting to me that never would have been a few years ago is some sort of like full stack firms. So like I recently looked at and got interested in, didn't ultimately do a full stack law firm. And the idea was, so you mentioned roll-ups, and that's really what triggered this for me. There, in accounting, there are a lot of roll-ups where you acquire companies and sort of add AI and hopefully boost margins and everything. That has not been an exciting category for me. I think like in accounting, there's a better opportunity to sell software, hence what we talked about earlier. In legal, though, I think because of the structure of the industry, it's hard to do acquisitions and actually change anything. So I think the best thing to do is actually acquire star lawyers, get their book of business, and like bring it over. And these star lawyers who want to be AI native, I think, have a huge opportunity. So like we looked at this AI native law firm. There are a few of them out there, but I think it's a tremendous opportunity. And there's no way I would have looked at that 3 years ago.
Yeah, I think some of the trends that have shown up around AI, I think, have changed the way people think about things. You're exactly right. Like I don't think we would have ever considered looking at some of these roll-ups. I know there were a few during the ZERP era that did pop up. Didn't really work out because I think they were trying to be purely financial engineering and didn't really have much of a tech background to it. But it does feel possible now more so than ever. That being said, I mean, I still do think there's some caution that we should have as we look at these models, especially for operators that have never done a debt, like either a roll up or anything that has like leverage on it. People that have never done it should definitely be cautious about it. I guess on that note, what are your kind of hot takes around the future of fintech, VC, pre-seed? Like what are you excited about? What are the hot takes?
I feel like there's nothing super contrarian. Oh, actually, maybe a topic on contrarianism itself. Everybody says the only way to make money is to be contrarian, right? And I would say that's one way to make money in venture. But actually, the key thing is being right. Even if it's like a hot space and you're not contrarian, but you win the deal, then that's awesome. So, for example, Brett Taylor starting Sierra. I think the seed round was somewhere just barely north of $100 million. I would have done that. There's nothing contrarian about investing in Brett Taylor. But Sequoia and Benchmark had the opportunity to do it and got to do it. It wasn't a contrarian deal. So I think there are deals that you can make a lot of money in, and even if you're not contrarian. And so I would say that's my hot take right now.
I guess the only pushback or the question maybe to that is, how does that play with valuations, and what's the how do you think about the math around that? Because you're right, like these companies can do well, but the prices that these companies are getting done at, it's kind of hard to figure out how much money you'll make on some of these things. I'm curious how you think about that.
Yeah, you can't be wrong. No, it's totally fair. I think in that case, like doing Brett Taylor at that price is totally reasonable. I think, I've seen more recently people investing in high school kids at that price, and that's a different proposition altogether. So yeah, there are trades that are too crowded, and so I think like it's great to be contrarian. If I think about like some of, like I think Vinod investing in OpenAI when he did, that was a contrarian move. I think Founders Fund doing defense tech stuff when they started doing that, those were contrarian moves, and those have paid off quite well for them. But I also think folks, coming late to the game still have done quite well. And it's really about winning the right deal. more than being contrarian.
Yeah. I mean, in some ways, you could say the legal tech stuff was very contrarian. I mean, when Sequoia did Harvey, like legal tech was not a hot category for a long time. And then the flip side of it is Legora. Like, hey, market opportunity shows up. It's not like Legora was first to the market, but they were there and like they managed to like be quick and capture a ton of the market. So you can have multiple winners in these big markets, and maybe that's a lesson. It's if you're gonna either you get to a really interesting market early, or if you're gonna get to the market a little later, you just got to back the best team. And even if you're paying a little bit of a higher price, you know what you're getting because somebody's done the market discovery for you.
Yeah, absolutely. Yeah, I think it's interesting in Harvey and Legora in particular because like it felt like Harvey had kind of been king made, but maybe there's no such thing as being king made anymore.
Well, there is, but I mean, I'm sure you see this as well with basis and the accounting wars. Actually maybe that is an interesting question to get your thoughts on. Is what do you think about the king making, and kind of are there gaps that you can exploit in these heavily funded categories?
Yeah, I think I haven't thought about it enough to say there's some opportunity. I don't know. What about you?
I mean, we've not. I guess we have a company called Udia that GC came in after us, and I don't know if I'm not sure if they would call them that king making, but I think the short answer is you're gonna have a mixed bag. Like the reality is that there are some founders that are just really good that are gonna take the dollars and know what to do with the dollars and deploy it smartly. There are also gonna be founders that get all the money and then make bad decisions when they have a lot of money because they don't have to be frugal. And we won't know the answer until years later, of course, unfortunately. But I think that I think it kind of comes back to what we were talking about earlier. It's not really about whether you're a contrarian or going with the herd or whatever. It's just were you right or wrong. So.
Totally.
It's the episode title. Don't be wrong. By Sheel.
Don't be wrong. Just be right.
Sheel, let's end for the followers here. Like, what's the Taco Bell story? What's sort of the genesis of it? I think definitely read articles. Some folks have kind of told me the story secondhand, but now that we have you live, would love to hear.
The genesis is Taco Bell's great. It's like amazing food. As growing up in America as a what?
A lot of Indians.
Awesome. Yeah, a lot of Indians love Taco Bell. I think it satisfies a bunch of things that Indians like. It's a lot of us are vegetarian. I am. It's probably the most vegetarian friendly fast food restaurant. It's spicy, which we like as well. Then it's also cheap, which many of us are. And so I grew up eating.
It's not that cheap anymore.
It's not that cheap. Yeah, you're right. It's not that cheap anymore. That is true. So I grew up eating a lot of Taco Bell, and so I've been a fan and just sort of like jokingly was a fan on Twitter, and then decided, when I got engaged, Taco Bell had this contest to sponsor one couple's wedding. And people kept tagging me in it, like, "Hey, this is perfect for you. This is perfect for you." And so my wife and I made a 2-minute video. It was just like we didn't think about it that much, and just like made a 2-minute video, and they chose us. And so they sponsored our wedding. It was really fun. It was already past the point that the metaverse was a thing, but there was a metaverse wedding, and then we had an in-person reception in Pacifica, which is, as you guys may know, beautiful Taco Bell on the beach.
I was just there 2 weeks ago. So
beautiful, so nice.
Hey, nothing beats a view with the crunch wrap. So
exactly. Exactly.
On that note, Sheel, appreciate you joining us on the DPI podcast. Thank you to everyone for listening.
Thanks for having me.
Yeah, hope everyone enjoys the show. Thanks again, Sheel.
Thanks,
Absolutely.
Sheel.
Cheers.
Appreciate you making time. Cheers.
Absolutely. Bye.